Hey guys, what's going on? Guys, let's talk about something that is near and dear to my heart. I just got back from the Traders for a Cause conference and been talking to new traders all over the world between my students and just people I meet. And I want to go over top 3 mistakes that new traders are making in this bear market. For those of you guys that don't know me, I'm Kunal Desai. I'm the head trader, big boss at Bulls on Wall Street. I have been trading stocks professionally as my job since 2008. I have taught traders all over the world how to trade momentum-based strategies, whether it's day trading and swing trading. And I am the guy you come to for solutions when you're having trading issues or just want to learn. So let's go over this. Top 3 mistakes that traders are making in this bear market and how to fix them. Because that's the big thing, right? We all know what we're doing, but what are some things that we can do to put action in so that we're not making these mistakes again? Mistake number 1, counter trend trading. Guys, we've all been there where we want to buy a stock because it looks cheap or because we are sensing some type of bottom in the market and we have this FOMO, like we've got to get into it because it's cheap. But guys, bear markets can last for long periods of time. If you look at our current market, even though we've been sitting in a range for a long period of time, we are in a big stage 4 downtrend that shows no signs of letting up. Guys, it does not matter if you time the bottom on a stock and buy it at 20 or whether you buy it at 25. The whole point is to get into names right when they start to ramp at those inflection points where things speed up. What I mean by that is if you buy a stock at 25 and then it goes to 30, but it takes you 6 months, is that really the type of gain you're looking for because you were trying to time the bottom? Our whole point is to find it at 25 and get it to 30 in a matter of days by finding those inflection points in stocks. But guys, you can get crushed so hard when you are trying to time a bottom in a particular name. We always think like, okay, something's 30 or 40% off on a discount, that it's cheap. I've been there and I've been crushed so many times. But look at these names. They have no bottom in sight. I'll give you a prime time example. UPST is a tech company that I traded for months and months to the upside when it became an IPO and ran all the way to $400. In my head, at $300, it looks cheap, doesn't it? Because it's dropped $100. And then next thing you know, it's at $200 and then at $100. When does cheap actually get cheap? You never know in the stock market, especially in this market. Stocks can go down 80, 90% before they find bottoms. But the key is not to try to time the bottom, but to look for systems and processes in to identify when that process is happening and that we're catching the ramp back up. The best thing to always do is trade with the trend. Rather than timing the bottom, our job is to trade the trend and start shorting as a stock starts to break down. And then when that downtrend is done, then you leave it alone and hop on to the next one. But guys, I have seen body bags littered all over the place on people trying to catch the bottom on UPST, people trying to catch the bottom on a firm. Like, at what point is the bottom really in? Remember that bottoms are a process. They don't just happen in an instant, meaning like you're not going to look for a one-off thing to find a bottom in a particular name or even the market. Stocks are like people. They take months and months of sideways movement and grinding to even out all the buyers and sellers before they're actually ready to ramp. So when you see a stock that you like, there's no one instance where this is the bottom. what's going to happen is you're going to have elongated bases that go for months and months and months till the sellers get tired, and at that point, a bottom is put in. But even then, you don't necessarily want to buy. You need to wait for the trend to start to establish to the upside so that you don't waste time for months in a particular name. But guys, counter trend trading is one of the biggest detriments to new traders. And a big reason for that is that they don't know how to short. So what happens in a bear market when you don't know how to short is you keep trying to time bottoms and long. In my 60-day bootcamp, we spend days and days learning short selling strategies so that you can actually make money when stocks go down. After counter trend trading, I think the number 2 mistake that new traders are making in this market is oversizing. Guys, when you oversize, which means you're buying too many shares in relation to your max risk per trade, what ends up happening is you get yourself stopped out of great ideas. See, what happens when you oversize is you end up putting your stop loss too tight, and so what happens is the market gets really volatile and you shake yourself out of the position because you have too many shares and you're unwilling to take XYZ type of loss. In this market, there is so much range in these stocks. You can trade small, 100, 200 shares, and still get really big gains because the range on these individual stocks is so high. When you see a setup like a Tesla, where it starts to break down and pops into the VWAP, and this is a classic bear market strategy, what ends up happening is, if you oversize and say you go in with 1,000 shares rather than 500, if it starts to tick up even a little bit, you'll end up stopping out of the trade before your idea actually presents itself. It's better to be in a small size where you can use a looser stop loss and let the range play out. These stocks are moving around $10, $20 per day. You don't need 1,000 shares or 2,000 shares or to put your whole account in them. I've got students of mine trading things like this with 50, 100 shares, making $1,000 in a day by letting the range play out. When you oversize, you get emotional, but also you end up putting your stop loss too tight and you shake yourself out of good trades. And that puts you into a spin cycle. When you shake yourself out of a good trade, you sit there banging your head on the door going, I had the right idea, but I didn't let it play out. And so then the next trade you get into, you end up oversizing, trying to make back the money that you thought you were going to make on this one, and that spin cycle starts and you never really get ahead. On these big downtrend days, you've got to let the range play itself out. You trade small and let the range pay you versus oversizing and trying to scalp for 50 cents or $1. Take the big chunks with smaller size and a little bit looser stop and just let the bear market do its work. That's the beauty of this market right now. If you can get in with good entries, then you can let the bear market do what it does and let it pay you and do all the work. We're seeing big downtrends on stocks. The key is, can you find the right entry and stay in it? So make sure you don't oversize. Mistake number 3, and this is huge. Right now, in this market conditions, you cannot buy breakouts. It doesn't mean you can't long stocks, but you cannot buy breakouts. So many traders have been trained by YouTube videos and trading books that use really basic strategies where you just draw a squiggly line on a chart and you end up buying and you think that's a breakout. Those strategies may work, like buying at highs on a momentum stock in a very, very specific market. Not only do you need a bull market to buy breakouts, but you need to be in a specific phase even inside the bull market, which is your runaway run-up market where the turds are flying and chasing actually works. In this bear market, if you buy breakouts, those get sold off. The short sellers come in hot at all breakouts and all levels of resistance, and you will end up getting knifed on these names. I was talking to a trader just yesterday who bought this breakout at $9 at 10,000 shares. Within minutes, he was down 10 grand. These things, when you buy breakouts, will drop so fast. Everybody's heard the term, I just got knifed. Well, that's what's happening in this bear market. Bear markets are a hunt for liquidity, meaning whenever you see strength, people are selling into it and short sellers are ravaging those plays. If you are going to trade these type of turdy names, you've got to always get in first on weakness and sell into those spikes. In these particular type of names, red to green trades or pullbacks that retest red to green spots are the best setups that you can do. But if you go and try to chase momentum in this type of market, you're going to lose money so fast. This is also the same in large cap names. If you are trying to trade a breakout on something that has tons of momentum intraday, but you're doing it in the teeth of a market decline, you're going to lose your money. Whether you're trading small caps or large caps, this type of liquidity crunch is common in all names. So you could see something like even this ENPH that goes red to green and has actually a nice pop where it's popping up $10 at some point intraday, but it doesn't matter. Like if you're using a tried and true breakout strategy where you're buying on the break of some level of resistance, well, guess what's going to happen? It's going to spike up for one or two candles and then get completely sold off as people, institutions, traders are using that strength to sell into it. So you've got to recondition your brain on how you trade to the long side in a bear market, because there are great long opportunities also in a bear market for small periods of time. But the thing that you can't do is chase, buy at highs, buy breakouts. Anything to do with strength or extension is going to get sold off. So you have to learn a completely different way of trading. Some mean reversion tactics or buying on big pullbacks to support when it is coinciding with a bounce in the market. Otherwise, you're going to be foobarred. These are the top 3 mistakes I see new traders make. Guys, don't counter trend, don't oversize, and then the big thing, of course, don't chase strength and buy breakouts. I know it's hard because we've been conditioned by bull market for so long. Since 2009, the market has just been going straight up for such long periods of time. We haven't had this kind of prolonged bear market in so long. And so you have to kind of get all those old habits out of the way and recondition yourself to real trading strategies, which involve longing and shorting. And it's not just about some small cap hype that was happening in 2021, 2020, where a stock would put out a PR and just explode and you could do whatever you want and make money. In this type of market, precision and execution and risk management are the key, but you've got to retrain yourself and then you're going to be able to make profits. Guys, I teach all of this type of stuff in my 60-day trading boot camp, which is designed to take somebody from A to Z on everything you need to know about trading. I teach classes live. It's the only way to learn. You can't learn this stuff off DVDs or YouTube videos, as much as it would be nice if you could. I teach them live and I have interaction with all my students. We teach class 4 nights a week live for 2 months. And by then you'll have everything you need to get started in trading. And you know what? This is a great time to learn all this stuff, because by the time you're done learning and studying, the market should start to shift a little bit and you're going to start to see a whole different phase of the market. We're probably in the last kind of runaway stage of the bear market. And who knows, in 3-4 months, we might start moving to the upside. So learn now so that you're ready when the market changes. And if the market doesn't change, we've been making tons of money on the short side. Guys, let me know if you have any questions. Visit us at bullsonwallstreet.com if you want more information about our 60-day boot camp, and smash that like button if you had some fun watching my videos.